2023 actually saw tax revenues decline in 40 states. The biggest losers, New York and California. So lawmakers are now considering new wealth taxes. Let's get out to Robert Frank with more. Robert?
Okay, the drop in IPOs and stock sales last year, adding to the fiscal crisis that's emerging in high-tax states. As you mentioned, tax revenue declined in 40 states, with the highest tax states hit hardest. California saw a 25% drop in revenue. That's comparable to the financial crisis and the dot-com bust. The state now faces a $68 billion deficit. That is the largest in California history. New York's tax revenue expected to drop by $10 billion next year. That could lead to a $4 billion deficit, $10 billion the year after that. Both states now battling demands to cut spending or raise taxes. California legislators proposing a wealth tax that would be 1% on total wealth over $50 million and 1.5% on billionaires. New York also looking to tax billionaires on their unrealized capital gains, as well as tax those of their higher incomes, making more than $450,000 a year. Now, already the top 1% pay more than 40% of the income taxes in both states, and some warn of further wealth flight if tax increases go even further. California lost 27,000 tax filers who made over $200,000 back in 2020 and 2021. Meanwhile, Florida and Texas, which of course have no income taxes, have seen population gains. So, Tyler, there's going to be a lot of pressure as these deficits, especially in New York with the migration crisis, California, as we see those capital gains dry up, whether to cut spending, they just can't cut that much, or how to raise taxes on the wealthy.
Don't most states, and I assume California and New York among them, have balanced budget requirements?
They absolutely do, and that's where the pressure shows up at the state level, and why we're not going to see much tax action on the federal level, because there's not political will or the unity to do that. But the states, to your point, they have to. And in progressive states like California and New York, there's just not the momentum by the legislature to cut spending as much as they need to. And so because of that balanced budget requirement, they're going to have to raise taxes somehow. And taking the Willie Sutton approach, you go where the money is with the wealthy.
I'm very intrigued by the idea of wealth taxes and how they would work, or whether indeed they are workable at all. But I wonder, talk me through it a little bit. Let's say I have an unrealized gain of $1 million on a stock, and I would be taxed under one of these plans on that unrealized gain. And then the next year, the market tanks, and my unrealized gain goes on that particular stock goes from $1 million to $100,000. I mean, what's the equity in that? In other words, now, are you going to give me back some of that tax that I paid you because my asset is worth a tenth of what it was a year before?
You essentially get a loss carry forward. So it's a little bit now where you get investment losses that can offset gains in future years. So in that case, you're right. You would be taxed on the $1 million gain one year. If it fell the next year, you would get a credit that could roll forward for several years. But that's, in effect, to your point, lending the government money on an unrealized gain. And so that's one of the challenges. The other big challenge that the states face if they do this, the reason that wealth taxes never worked in Europe is because people just moved from one country to another where they could move more easily. Now, if you do it at a federal level, you then have to renounce your U.S. citizenship, pay a huge capital gains tax in order to do that. At a state level, you just move one state over, in the case of California to Nevada, or California, Texas, or New York, Florida, and you get rid of a wealth tax. So at a state level, I just think it makes zero sense because of mobility, especially the wealthier you are, the easier it is to move.
All right, Robert, thanks very much. We'll be keeping an eye on that throughout 2024.